The new IMF report is an absolute bombshell. The International Monetary Fund is now officially admitting that stablecoins are on the verge of displacing entire currencies, hollowing out the banking system, and even threatening the financing of the US government. It says here, decreases a central bank's ability to control its monetary policy. So they're not worried about security, they're worried about control. Their own instruments of control, which they are increasingly at risk of losing. And whether they mean to or not, the IMF, the International Monetary Fund, here indirectly confirms the most important truth. Or you could even say the IMF is directly confirming it here. The fiat system is losing control, and Bitcoin, watch out, is ready to take over, to replace this system, and stablecoins are the bridge to that. Now, let's take a look at the most shocking statements, the direct quotes. From this report, and why Bitcoin can no longer be ignored, why the transition's already underway, and why. Even the IMF, the Bank for International Settlements, and all central banks worldwide are really shaking in their boots over this. And Christine Lagarde, holed up in her ECB bunker, is just as busy trying to introduce the digital euro as quickly as possible, because she knows time is running out for her too. And then Donald Trump and Scott Bassett come into play. We'll take a look at that in just a moment. But first, I'd appreciate it if you could give me just a second of your time. It's really important that we get your support here, so smash that like button down below for higher Bitcoin prices and new all-time highs. And as a thank you, I'll show you the bullish Bitcoin cat here, who's currently eating. Yeah, she's not starving. Do you see that? She's got food here and even something to drink. Let's go. So what happened here? This report just came out from the International Monetary Fund, who, by the way, also blackmail El Salvador and many other third world countries, basically engaging in a kind of debt slavery, according to the Human Rights Foundation. And now this departmental paper has been published, Understanding Stablecoins, from the Monetary and Capital Market Department. And this is a brand new report, and is 56 pages long. I took a look at it, and it really has a few very interesting, I'll just say, few very interesting takes in there. It starts off pretty intense right away. It actually says here that stablecoins could replace currencies, especially in countries with weak monetary systems. And what do these people in power want? Of course, they want to maintain their power. And this is exactly the bankruptcy declaration of the fiat system. Bitcoin is the ultimate form of capital flight. Bitcoin fundamentally can't be stopped. It can't be frozen, and it can't be centralized by any single entity or government. This is precisely because it represents the exact kind of capital flight they are discussing and observing here. This significant characteristic means that Bitcoin offers a robust and unalterable solution in situations where traditional financial systems are vulnerable. Here, at this very moment, right here, banks' control over domestic liquidity and interest rates could weaken. So the bank, right? Let's start with that. The central bank is losing more and more influence here, especially when people flee from traditional currency, either using stablecoins or Bitcoin. We all remember, the central bank can influence various mechanisms. Above all, they have influence over the key interest rate. They can adjust that, and through government bond purchases, they can indirectly affect long-term interest rates. They influence things here, but it's already very difficult for them to control the long end of the interest rates. And now what? Tether & Co. come out and issue their own stablecoins, then of course they also have control over the supply of government bonds here. That means all of a sudden they're the ones steering indirect interest rates here, and secondly also the money supply, because now the state has a reliable buyer. And many people also assume that the Genius Act was introduced for exactly this reason, because Donald Trump wants to bypass the central bank. He basically wants to sideline the central bank. He wants, through the Genius Act, through the Treasury Department, through Scott Bassett and others, to influence these stablecoin issuers and basically create a central bank moment 2.0, where the central bank is no longer the decisive factor, but instead Donald Trump can control the markets through these stablecoin issuers. Of course, that's just a conspiracy theory, but who knows? Let's continue here. During runs on stablecoins, fire sales of the underlying reserve assets could occur, impairing market functioning. The two markets most severely affected would be those for T-bills and repos, also known as repurchase agreements. And T-bills are the short-term government bonds. That means they're also admitting here that crypto companies are already influencing the financing of the U.S. government. Stablecoins hold about 2% of the outstanding U.S. T-bills. If stablecoins grow, yields in the T-bills market could be compressed. So, of course, the more these stablecoin issuers buy T-bills, the more these interest rates are pushed down because demand for them increases. That means the higher the demand for bonds, the lower the interest rates. That's the relationship. And on the other hand, of course, the price goes up. And naturally, they're in a total panic about this. And it could even be amplified with bit bonds, but that would go beyond today's topic. I talked about this several times before that the central bank could especially lose control here through stablecoins, and even more so in combination with bit bonds. Just as a quick reminder, a stablecoin issuer like Tether & Co. always has a US dollar equivalent. This is backed by US Treasury bonds, and then it's basically issued as a stablecoin. That means a stablecoin always represents $1, but it's essentially backed by a T-bill, which is nothing other than a US Treasury bond, just a short-term one. Then we have the IMF confirming stablecoins endanger banks. Deposits are disappearing. Stablecoins may affect financial intermediation by offering an alternative to bank deposits. This intermediation in retail deposits could increase costs for banks, reduce stable sources of funding, and does impact their lending. Provisions. This is an official confirmation. The banking system loses customer funds as soon as digital alternatives exist. And now they're really getting wary. And Bitcoin would only make this even worse. Bitcoin actually leads to even more customer funds being lost by the banks. The IMF also admits that stablecoins are vulnerable to runs and can collapse. Now, I don't know if this is just fear-mongering or if it's really an admission. It says here, in case of large redemption demands, the issuer would need to sell large amounts of reserve assets, possibly at fire sale prices. That's proof that stablecoins aren't actually meant to be stable. But it also brings another danger. There's always the indirect threat that, for example, Tether and others could sell large amounts of Bitcoin. Now, there's always the risk that in such a fire sale as described here, Tether would have to offload massive amounts, throwing Bitcoin on the docket, and that would lead to a massive price drop. But Tether, as far as we know, is over-collateralized. They have gold, they have Bitcoin, they basically have better assets than any central bank. And the likelihood that they would, let's say, have to sell Bitcoin or gold in a crash, I think a regular central bank would go down first. Although, of course, I wouldn't want to bet my life on it because there are sometimes inconsistencies in the audits and so on. You can't confirm 100%, let's say, that the reserves are really there as you think they are. It also says, yes, existing stablecoins are vulnerable to run risks during stress periods. So during periods of stress, major risks can arise here. These circumstances create a first mover advantage with investors willing to sell their coins even below par. So even here, the backing, the one-to-one, backing could be lost. Backing could be lost. And that could then disable the entire financial system. Yeah, of course, they have to play up the panic angle a bit here too. On the other hand, there are, of course, also shady stablecoin projects. Not everything is, let's say, as solid as Tether here. But Tether already seems to be, even though it's not mentioned directly here, a major problem for the international currency system, from the looks of it. It also says here that stablecoins are made up of 80% trading bots, not real users. I don't know if that's true, but it's definitely a claim being made here. IMF warns that stablecoins undermine collateral, traffic controls, and state power. State power. And now it gets really relative. That's exactly what they want. They want control, they want surveillance, and that's exactly what Bitcoin doesn't provide. That's also something that stablecoins can kind of bypass. Stablecoins could significantly reshape capital flow and exchange rate dynamics, reducing cross-border payment frictions. So this is basically what the states are afraid of. Money can flow without borders no matter what governments prohibit. And Bitcoin is, of course, the ultimate capital flow revolution, if you want to put it that way. The IMF is calling for global cooperation because they can no longer control the system. Here it says the cross-border nature of stablecoins adds complexity for regulators, making international cooperation even more essential. So you have to work together here, otherwise you'll lose control. We need worldwide regulation, otherwise the system will slip away from us, otherwise we won't be able to control it anymore. And what is Bitcoin? Bitcoin takes it even a step further here. That's exactly what I mean, stablecoins. They basically accelerate Bitcoin adoption because people come in through stablecoins. A whole lot of people end up coming to Bitcoin this way. And stablecoins already have minimal elements of what Bitcoin makes possible. But of course, Bitcoin is the ultimate manifestation of its freedom. And stablecoins are basically just a preliminary stage of that. Although, of course, stablecoins are still massively dependent on the US government, on US Treasury bonds, and so on. So you shouldn't misinterpret that. Stablecoins are not freedom tools. The IMF recognizes that weak currencies are especially at risk. Countries with high inflation, institutional fragilities, or diminished confidence in the national monetary framework are more prone to currency substitution. So here, the worse the currency, the more at risk you are of having stablecoins take over. And of course, the more at risk you are of adopting Bitcoin as well. And naturally, from the IMF's perspective, this is also very, very bad. Stablecoin usage, it dominates in emerging markets. This is stated very clearly, and it's the same with Bitcoin to some extent. The worse the system, the more Bitcoin gets implemented. The IMF also recognizes that users prefer wallets over banks, self-custody. Stablecoins can be held by the hosted, that's always the funny word, hosted wallets, raising challenges for regulators. So the world is moving towards self-custody, server entities, and the Bitcoin standard. That's what they're saying here. That's also what I always want to tell you. Get yourself a hardware wallet. Here, I recommend a TREZOR hardware wallet. I'll put a link below for a TREZOR hardware wallet. Here, you can simply, safely, and easily hold Bitcoin without the IMF, a central bank, or anyone else being able to change the interest rates on you, and without anyone being able to confiscate your coins. Of course, you can also hold stablecoins on a TREZOR hardware wallet like this. There's a Bitcoin-only version, but there's also a multi-currency version, and the TREZOR 7 is the newest one. It's even quantum ready, with an open source secure element and other great features. So feel free to check it out. Code Bitcoin Hotel, the link is below, and with that code, you'll also get discounts at the address. Basically, what we've just heard here is from the International Monetary Fund, and I'll also link the entire document for you below. I've only read out the quotes here, of course. I'll link the whole document below so you can go through it yourself. Deep down, it's basically a declaration of bankruptcy, an admission that, okay, Bitcoin and stablecoins are the new big thing. And honestly, we're in a total panic about it. And if you want to get into Bitcoin now and dive even deeper into it, then I recommend you give it a try yourself. You can check out the app or the provider 21 Bitcoin, which I always recommend. Because the thing is, there are good providers and there are bad providers. What makes a bad provider? For example, providers that confuse you with leveraged products. Providers that offer all sorts of weird coins, meme coins, where you can easily get lost. That's why I like 21 Bitcoin so much, because it's a Bitcoin-only platform. No shitcoins, no leverage, no overly complicated stuff. Just buy, save, and hodl Bitcoin. Simple as that. That's it. And then transfer it to your hardware wallet. And that's all there is to it. There's a link to 21 Bitcoin down below. With the code Bitcoin Hotel, you can still get up to 20% off fees when buying Bitcoin. Check it out, and I'll see you there. Peace out.